Welcome, ladies and gentlemen, on this first activity of remarketing in 2024. We're all happy that you've joined, and there are slightly more than 200 people who have registered for this session today. So, I think we will have an exciting year ahead, as I think we can say we had for the last years as well. So let's have a look first at our sponsors, which we would like to thank again because they always give you the ability to join this free of charge. So thanks a lot, Cars to Click, and then AutoChat and DAT Group. So let's have a look at what we will do today. First, we're going to hear a bit about what are the activities that Fleet Europe offers you this year. Afterwards, we'll go into to the key of this is optimizing resale value in the current market. We know that it's all been more challenging in forecasting RVs, and certainly in a world where everything moves into electric, there's a opportunity, but also a challenge to see that we can sell used EVs as well. So I'm first going to invite Fleet Europe David to join us on stage as he will guide you through what is new in 2024. Welcome, David.
Hello, Johan. Thank
Hi.
you for having me with you on this remarketing expert track. Welcome, everybody. Well, you know me. I'm David Bodrins from Nexus Communication, Sales Director and Remarketing Ambassador within the company. We had a fantastic 2023 year, I think, with regards to all the remarketing activities, with a fantastic event in Lisbon. Many people still talk about it, and therefore we have prepared our schedule for 2024 with some novelties. Yeah. First, the agenda. So we have a combination of different planned activities. Yeah. These are the remarketing expert track events. These virtual events. First one taking place today, next one taking place in September, and that will be more focusing upon defleeting and everything which is related to defleeting. In April, we will have a dedicated remarketing ebook focusing upon AI, and of course, again, from a large perspective, so many topics will be covered related to AI. And in September, we will also have an ebook on OEM and remarketing, so more on the car manufacturer side, what is playing from let's say used car practices, etc., at their side. Remarketing Forum and Awards. I think that everybody's looking forward to that. So this year, Milan. On the 23rd of October, so a bit earlier this year, in a fantastic venue, in a quite young, modern area in Milan, in the Maico Congress Center. So looking forward to that. We have, well, you see already the slide of the awards, but we are working now with an established advisory board on the program towards the event. And that advisory board will have several meetings throughout 2024. Next meeting is planned for the 7th of May, and afterwards we will start promoting the awards. So the awards will enable you, so the stakeholders within the remarketing ecosystem, to apply to become one of the next winners. So you have three awards which we normally already know. The Remarketing Car Manufacturer Award, which we have launched last year, which was won by Link & Co. Yeah, you see Ian Hucker there, somebody who was already in the industry for quite a while. Next, you have the Innovation Award, won by Martin Beckers from AutoChat, who's also with us today. And then Peter Groftehoge from the Autorola Group won the Hall of Fame Awards. But brand new, following to certain suggestions last year, we will also bring a sustainability award. Yeah? Car remarketing is often about making the life cycle of a vehicle longer and making it as sustainable as possible. So that is an obvious one, but there are much more things which are playing in car remarketing operations, which could be looked at from a sustainability perspective. So we are convinced, and along with several other decision makers and advisory board members, that this was the right choice to launch that new Remarketing Sustainability Award. So quite I'm looking quite forward to who would like to enter its application for that new award. So more about this as of the mid of May. So follow us, because these awards are made for you and for your organization. So we hope to see many applications as of mid-May, when we will launch the promotional process. Next slide, please. Thank you, Benedict. So last year, for those who follow us as well on social media, well, we had a LinkedIn group which was focused upon remarketing, which was a bit outdated, and we decided that we would create a page, a dedicated remarketing page. The advantage of a page is that we control more whatever is being posted there, and we can delegate towards a certain number of people to post things there. Everybody's able to react, but this is for sure something where you will be able to follow all activities which we will organize, also the awards processes, the advisory board. Let's say the advisory board will also be able to share certain comments following to me or somebody of Fleet Europe having mentioned that an advisory board meeting took place. So that's the place to be up to speed to everything which we will be doing, and also everything which is very relevant within the industry, of course. Johan will also take care of it with some other stakeholders to post most relevant things there. So to follow the remarketing LinkedIn page. That is for me at this stage it, Johan. I think that we're now looking forward to your moderation of the event, and yeah, good luck to all
Maybe
the
David,
speakers and all the panel members.
I've got one question. Maybe in the agenda, you actually said that this is the this is the agenda as is the outlook right now. That does mean that you could have additional stuff in
Yes,
there,
it's
like
true. It's
ebooks
true.
or
Yes,
expert
it's true.
tracks or
We spoke
webinars.
about that. Correct. We spoke about that because indeed it was an inquiry of certain suppliers within the remarketing industry. You're absolutely
Mhm.
right. As a salesman, I should emphasize more upon that. You are right. Thank you, Johan. So it is true that there are a lot of on-demand possibilities. You were referring to an ebook. We have scheduled two of them. You can have specific ebooks focusing upon one specific supplier with all the solutions he has to offer. We could work upon webinars which are also focusing upon one topic, or even with multiple suppliers. So indeed, for those people within today's event which are interested to discover more, there is indeed more than only the things which we have planned. And me, Johan, and some other of the content team members here are always very keen to brainstorm with you guys if you think that you have a content which needs to be tackled and to be explained better or differently than what is already known within the industry. So thank you, Johan, indeed, for pointing out. It's absolutely true that there is a lot of other opportunities also possible, except of what is
Yes,
planned.
yeah, and also we'll start with this a bit today. More at the end, we will ask you a poll on what elements would you all still love to see as a content, contributions, whatever it is, articles, webinars, or even your input will be a start of maybe how the outlook will be of the forum. So more on this completely at the end. So David, anything else, or you're okay like that?
Not at this stage, Johan. Thank you
Okay.
for giving me the stage, and have a nice continuation.
Thanks, David. Okay, thank you. Okay, let's get back to our program of today. And now we will have a look at something which I think is clear that it starts to become much more challenging on forecasting RVs. Residual values with all events we've had for the last years, from basically a buyer's market, we have probably moved again into a seller's market. with maybe slightly oversupply. So, who else could we invite in the first webinar of this year than Autovista Group, Mr. Engelskirchen, Christoph? Welcome this
Hi,
afternoon.
Johan. Hi. Hi,
I
everyone. Hey.
see, I see you're outside there somewhere. Huh?
It's
Nice blue
just
sky.
a virtual background. Yeah.
That's-
This is actually
okay.
our office, like the view from our office in Frankfurt.
Uh,
Yeah.
Great stuff again. Okay, so all yours. I don't know if you would like to start with a poll or if you just want to use them along the way. That's all up to you, Christoph.
No, I'm happy for you to call the shots on any of the polls that you want to put up. If we want, we can just directly start into the presentation, and maybe you
Okay.
can pull up my screen.
Yeah.
So, you asked you asked me to give a little bit of a background, a little bit of context on what's happening in Europe at the moment, obviously with a focus on used car values, and then ultimately, of course, also about battery electric vehicles and what is happening with them at the moment. And
Okay.
I'm not giving away too much, I hope, by starting this presentation with the title, that we are returning to pre-pandemic market dynamics. I guess some of them didn't expect them to come back so quickly, but then on the other hand, we have been observing these trends towards more supply and possibly a bit less demand over the past 9 months. So, bit of context before we go into the details. I just wanted to show you what's happening in terms of economies and in terms of growth by comparing what we saw in the years 2016 until 2019, compared to what we're seeing now. And from the chart, you can first of all say that okay, we are back in a growth scenario, right, which is good. And these are, of course, again, all forecasts, and they are not necessarily correct all the time. So if you're looking at these forecasts, you want to look at how much they're changing from quarter to quarter, and also how different these forecasts look by comparing different institutes that provide these forecasts. And this is real domestic, real gross domestic product development over time. And we are in 2023. You can see that Euro area and the UK, were almost at point zero, zero growth, just slightly north of that. And in general, I guess the only developed big industrial country that saw actually a recession in 2023 was Germany. Yeah, economies contracted by around 0.3% in 2023. So we're back in a growth projection. It's a bit different than what we saw before the pandemic. Some have called it globalization, which didn't really catch on as a major buzzword, but I think it describes very nicely what we're seeing, right? So we are still seeing a world with growth in terms of trade. Yes, so the trade volume that economies are trading amongst themselves is still growing, which is positive. We see resilient labor markets. At the moment, we see that inflation is coming down, especially in the US. There have been some advancements made in terms of inflation coming down, which is reassuring. The only thing that is a bit concerning still is, although business and consumer confidence are rising, they are still below 2018 levels, and I guess we can relate to that, right? So this is some context, and when we look at the highest level of aggregation of passenger car used car values and light commercial vehicle used car values, and this is a price index for these used car values, so it's a properly calculated price index. I've put a lot of footnotes on the slide if you want to read up on the methodology. You can see that LCVs, they benefited particularly strongly over the past 4 years, but now are coming back, and the same is happening for passenger cars. Yeah, so we are not yet back at the levels of pre-pandemic, yeah, but there's certainly a downward trend. If you look very closely, you might want to argue, okay, but isn't there a little plateau forming? Yeah, so can we see stability in these markets? We're going to come, or in these segments, we're going to come to that in a second. I also want to just give you the reassurance that these trends are pretty consistent across countries, across markets. We have the red line here with UK, which is always a little bit more elastic in its behavior. Not surprisingly, because they have a market that is a bit more closed or more difficult to have supply and demand meet, because you cannot easily import or export cars. So you have these elastic movements in the red line here, but now they're also back with the pack. And so everyone or every country is seeing some downwards moderation in terms of residual values. I do want to talk a little bit now about battery electric vehicles, because I think that's a big concern that everybody is talking about. We're getting a lot of questions on what's going to happen with electric vehicles. This is a chart showing their new car sales in terms of market share, in contrast to the overall passenger car vehicle registrations in the big 5 European markets. Yeah, so the bars, they represent the total passenger car registrations that are being projected, and the shares are just battery electric vehicle market shares. And two things I think are important to take away here. First of all, in these projections, and they might be conservative. You might say they're a bit conservative. You might say they are spot on. But what we can see here is that the total number of car registrations that we saw in the years of 18 and 19, they will not be coming back so soon. Yeah, so maybe it'll take until 28, 29 until we hit those levels again, if we ever hit those levels again. And I mean, one of the reasons why we see a little bit of subdued growth in terms of total car registrations is that we have fewer replacement transactions. Yeah, the only thing that is going to help and maybe increase that growth of total car registrations is that this trend to leasing continues, because that is actually going to produce cars more quickly and replacement cycles more quickly. And the trend to leasing is definitely one that is that we're seeing, in particular also for battery electric vehicles, right? So that is going to help increase the total number of cars sold again. Now, looking at the line here, which is the market share of battery electric vehicles in those markets, we can see that we had around 14% of new car registrations in 2023, and that's not much more than the 13% we saw in 2022. So there is a bit of a plateau forming as well. It's not really a plateau, it's still growing, but the growth is much smaller than what we saw in the years before 2022. And that's, of course, that's a bit of a concern, right? So as we're transitioning to the mass market for electric vehicle, if the new car market isn't jumping on those cars, isn't buying them, for whatever reason, what you would think is going to happen on used car markets, where adoption just takes a little bit longer, especially when it comes to new technologies, when it comes to to technology that is costly. So the transition to mass market is not only an issue, of course, for the new car market, but for the used car market as well. We still believe it's going to happen, right? So you see that eventually the dotted line is going to pick up speed again, and there's policy, there's strong political will, strong policy in place that mandates that electric vehicles will form a large share of vehicle registrations going forward. So now switching back to the charts that you have previously seen, now we're talking about used car passenger prices by powertrain type. Yeah, and this is a chart for the UK. again, pretty consistent across countries, but this is for the UK. You can see that the green line, which represents the price index for the pure electric vehicles, has been under particular pressure over the past 6 to 9 months. I mean, on the one hand, I want to say it's not surprising. Yeah. So first we saw major list price reductions, which came, I guess, for some people it came a bit unexpectedly. But on the other hand, if we're talking about mass market adoption, I think we all agree that list prices have to come down. Yeah. So that's but that has had a major impact, of course, on used car remarketing results for battery electric vehicles. We also have a trend in battery electric vehicles called higher life cycle depreciation. So as technology matures, the cars depreciate. Yeah, so that's been known for many, many years. Hopefully, it's going to slow down that life cycle depreciation as the technology matures, as range increases, also as infrastructure increases. But for the time being, well, we have that, and we need to consider it in forecasts. The third point is we do have a particular situation of high supply and low demand as we transition to the mass market. We've talked about that gap between new car market and used car market. Also, something we're going to talk about in a second, how we're going to deal with that. And maybe on a more positive note, what you're seeing on this chart is the old cars, right? The older used cars, the 3-year-old cars, 4-year-old cars, and they belong to a very different category of cars. They are usually bigger. Yeah, they're usually priced a little bit higher. They were targeted at early adopters, innovators. Now with the smaller, more economic variants of cars, we should expect better residual value performance because they could be more attractive to Joe and Jane average, to the mass market buyers of used cars. I don't want to dwell too much on this chart. It's just a consistency check. Do we see any differences between markets? And in between January 2023 and February 2024 for battery electric vehicles, we saw this this drop in residual values. This is not points, by the way. This is percent, and and it's a bigger drop than what we saw on average in those markets in that period. Yeah, so no surprise here. It's a consistent trend across markets. Now, if you wanna check out what we believe is going to happen this year and next year by powertrain type, you can always go on to autovista24.com. We do publish a monthly update. It's free for you to access, and you can always have a look at what is happening month by month. You can select the market, you can select the fuel type, and you can get a little bit of a better understanding, what's happening here. There's a bit of commentary, of course, as well from our editorial teams. Yeah, and I mean, this one is actually a screenshot from a recent one. So we expect, for example, in the UK, across all powertrain types, a reduction of 7.5% in 2024. Some of that has already been, has already happened. And my last slide is a little bit of an outlook. So what do we think is going to happen in 2024 and 2025, and what should we how should we deal with the challenges in those 2 years? So the first point, maybe an obvious one, but I think it's something that every stakeholder has to get their head around quite quickly if you haven't done so. So you have to prepare for a situation where there is higher supply than demand. Pretty much pre-pandemic automotive market conditions are back. There are significant levels of uncertainty in the market. All these elections are coming up. There might be a shift to the right, and people are just concerned, and that is usually not helpful. When you want to pay or buy something as expensive as a car. Interest rates are still high. They might come down in the second half of the year, which would be a blessing if inflation is down well enough by then. I've talked about the fewer replacement transactions in fleets. So we've seen a lot of replacements over the last 3-4 years, and the fewer registrations over the last 3-4 years will trigger fewer replacement transactions. So it's something to be prepared for. We have new brands entering Europe, not just Chinese brands. A lot of brands are actually seeking Europe as a rich market where they can sell cars into. That's possibly going to create more supply than there is demand for cars. And last but not least, we have this OEM pressure to shift from ICE vehicles to BEV, and that is also possibly going to trigger a bit of a supply pressure on battery electric vehicles if they do not contain, the overall level of registrations. It's interesting. I mean, for the past 4 years, I almost thought, okay, I mean, residual values are just not a concern anymore for anyone, and that has changed. Yeah, so everything's back to pre-pandemic levels here. Residual value management is important again now in this context, and the golden rules are managing short cycle channels tightly versus competitors, which means you still have to do it. But if you want to make sure you are least affected with your residual values, you have to be less aggressive than your competitors if you're an OEM. Pushing the metal via cash discounts is a no-go. It has always been a no-go. Find better ways to hide discounts that you may want to or have to give in this market context. Point number 3 here is you do need to think about how to create a mix of registrations that will be attractive later on as used cars. And it's not rocket science, but it's sometimes forgotten, and that's why it's really important that used car management remarketing teams in the OEM organization are really empowered, but also in the leasing organization, in the fleet context, are really empowered and considered in decision making when it comes to new vehicle mix, new vehicle registrations, new vehicle campaigns. And the third area I want to talk briefly about is battery electric vehicles. The good news here is they will come, and I'm sure we will all deal with it. It's important, for example, to distinguish between the cars that used to be launched and targeted at the innovators and early adopters, where people were really able to pay a lot of money for this technology. And as we're moving into the mass market, those cars become more economic, but also this could make them more attractive as used cars in the next 2-3 years. Second point here, life cycle depreciation will continue to be higher than the life cycle depreciation of internal combustion engine cars, but leasing companies have lots and lots of data on it. We have lots and lots of data on it. This is a building block of a residual value for electric vehicles that can be quantified. Yeah, so we don't have to be worried about it. We can quantify it. And again, I think later we'll talk about how much more technological advancement do we expect for battery electric vehicle, or have we come to a point where the improvements are marginal and the costs are what they are. The third point here is also really important, and particularly important for battery electric vehicle remarketing. You have to really make sure you understand where BEVs are attractive in which market, as new cars and as used cars. And that is changing constantly. I mean, just in December in Germany, a huge incentive was taken out of the market. Now these cars need to go somewhere else. And if you are remarketing these vehicles, you need to understand which markets are attractive and be quick about channeling your electric vehicles, new and used, to those markets, and that's going to support residual values a lot. And fourth point here, again, a little bit more targeted, possibly at OEMs. Battery health certification is a win-win scenario, because once you start pushing into that area, incentivizing good treatment of battery and being able to prove that it has actually a positive effect on battery health and longevity, this is going to support residual values. It's going to give peace of mind to consumers. And the last point here on the slide, you've got to start thinking about giving owners of electric vehicles, also used car owners of electric vehicles, and a very concrete idea and transparency around what it costs to replace a battery. What does it cost to repair a battery? It's fine if it costs 3, 4, 5,000 euros if you can make that transparent and tell customers, and you're going to get another 8-year warranty on it. It's going to support residual value. It's going to support remarketing. People will warm up to the technology on the used car market much more quickly. Johan, this was my presentation. Back to you.
Thanks a lot. Now, just maybe we could launch some polls. We had 2 polls here, and then we could talk about what the feeling is. If you just scan the QR code with your smartphone, then it'll come up and you can vote. So, do you believe that residual values will come under more pressure in 2024? Now, of course, after this introduction, you might follow the general feeling here, but still, we would love to have your view on this. In the meantime, what I also would like to ask you, after this first expert speaker, is if there are any questions, and I'm sure there are many which haven't been answered, feel free to post them in the chat. Later, we will have 2 additional experts joining us, and we will certainly handle these with the panel. So we see that, I think in general, stronger contraction, a little bit more. So we have almost no one who says no. Is this a surprise to you, Christoph? And what news is there that actually can give some confidence to people, Christoph?
Yeah, I mean, if you get a question like this, without looking at the data, without analyzing it deeply, you do this, from, I guess, from your stomach, or maybe from past experiences.
Yeah.
So I think it's important to, and to your first question, I would have thought that answer number 1 and number 2, I would have been a little bit more equally weighted in the response, but it also really depends on on whether you are invested in a certain type of vehicles. So it depends on which type of vehicle you have in your portfolio. Some might be more worried than others because of the particular mix. And yeah, I mean, I think what's going to be positive is that if we start into the second half of the year with an interest rate cut, if some of the elections that we are seeing across Europe don't shift economies and markets to a more protectionist scenario, that's going to be that would be very positive if that's not happening. And yeah, so I think I would be cautiously optimistic. I am a bit surprised to see, to not see a little bit more balanced response here. Yeah.
Okay, thanks, and we'll see you afterwards again in the expert panel. And thanks for your contribution. And I would like to move further to the second expert speaker. And Brian, welcome on stage. I will see you in a second, and people will see you as well. Now, I think the introduction was already slightly given, Brian, by the other expert, because he said you need to understand where cars can be sold. And I think this is completely up your street. I think for the last year, we've heard a lot about cars to click, cars to view, cars to whatever. I think I would probably miss some of those of your activities. And I think now you will also share, and I think people are much looking forward to this, is how much can you actually gain in resale value if you really exploit the markets well. And we had a question in chat from Belinda, who's in this same area, is where do you believe the second-hand EVs could be sold to? So I think that's all in your area. Okay, Brian?
Okay, thank you.
It's all yours.
It's all mine. Then I will spend the next 20 minutes taking care of this presentation. And as you all know, my name is Brian Madsen, and today I'm going to talk to you about cross-border pricing, what we call in our world called geo-pricing, and how we are using AI data solutions for residual value management together with some of our customers. Very quickly, our company just turned 5 years old, and as Johan rightly said, then we have several activities. We won a few awards during this time with our AI solutions, and that is, of course, very helpful when you start a company. Today we have Cars to Click, which is our car trading company, which is the main business and also why we develop IT solutions or AI data solutions. It's only because we want to improve and become better of selling cars together with our customers. Cars to View is our market analysis and data company. We accidentally started a transport company because we needed that to handle all the VAT and the CMR. And we have recently launched a new company where Cars to Exchange, where together with our partners, we are pricing and buying cars from consumers online. So that's that for the presentation. The first thing I want to say, and Christoph rightly showed some graphs, so I decided just to show some more, verbal parts here. Why is RV and geo-pricing so important? And as Christoph rightly said, then things have changed. And if we look at the very simple graph here, then 2019 and beginning of 20, things were like going in one direction. And that was because the supply and demand was more stable. Things were normal. But during a long period, we had a supply and demand that was not stable. And it was not healthy for the pricing in the market. But this is coming back now. This is what we call new normal. So without going further into this, then I think everybody understands that the situation we had for a few years is not the situation we're going to go forward with. And RV management and understanding what to look out for is more important now than it's been the last few years. So what we did a few years ago, we set out to say RV management and also asset management. So we created an ecosystem. And this ecosystem is not just about pricing. It's about the whole workflow, the whole management of a car from the time you buy it until you defleet it or sell it. And this is in a solution that is built in fleet management, it's control, it's market data, it's different tools like VIN decoding and the reporting, but also connected into the wholesale environment where you can actually sell these vehicles. And I'll explain a little at the end why we talk about that, because wholesale, the way it's been done in the past, we believe and we know the way we work today, that there's other ways of doing this more efficient. Before I go into that, then geo-pricing is based on data. And the way we collect data and the way data should be collected is, of course, by starting with raw data. That raw data can come in many forms. Either you get it from scanning or collecting data from different websites or portals where we have retail price and cars are for sale, but also, of course, to the transaction data you have on your own sale or auction platforms, or you have your suppliers, the performance of their own sale. All that data has to be combined and come in and join forces somewhere. And in our world, we call this our data factory. And if you get data from Spain or Germany or Denmark or Finland or directly from a car dealer's sale or an OEM's sales performance on auction or whatever, that data needs to be normalized. And this is a huge task, and this is why AI is coming into play, because to do this in Excel or with people or whatever, it's not possible. It takes too long. And that data needs to be normalized so you can use it in the same way. Then there's always missing data. No matter where we get data from, there's always data that is missing or even wrong data. So that data needs to be updated. And the AI will understand if we put diesel on a petrol car or we put a wrong mileage or first registration is wrong. The AI can actually identify all these problems and update that data. And there's also ignore rules. Let's say that we have cars that are online with damages. Of course, the price on that car might be half of what it will be when it's refurbished and new. And the AI can actually identify those situations and ignore that data set or change it. And then in the end, you need to standardize everything. And then we have one little problem in Europe. It's about tax. We have a simple problem or simple challenge, which is the VAT. That's just a percentage, right? But in countries, we have tax issues as well. We all know, like the country like Denmark, where I come from, the prices on the car are super high, but it's not because of VAT, it's because of tax that is added to the vehicle. So it's very important that this is being done, and it cannot be done by people, again. So after this raw data has been transformed and calculated, then we call this smart data. And this is something that is needed in order to do real RV management, because we need smart data on each country. So smart data is created like this. Normally, we use, or the companies that works with this use online pricing. And they look at the cars online, they look at the pricing of these vehicles, and sometimes they even use how many days the cars have been online in order to calculate if this is a fast-selling car or slow-selling car. But what is more important is actually to start looking at the cars that were sold. And the only way we can do that is, of course, if we have a database, we have AI that can keep track on the cars that were online and how long it took to sell those cars. And by doing that, we can then create two things. One is the real B2B price per country. It means the Danish price now is without the tax, without the VAT. And we also have a sales factor. That sales factor is about the balance in the market. And this is two factors that are very important when you start looking at the opportunity of defleeting or remarketing into different markets. The way this is done is that the AI will present a business case and say the best price in Europe, and this is of course just an example, the best price in Europe is this case 21,000 euros for this car. And this case was Austria. How many dealers are selling these vehicles? How many vehicles were sold the last 30 days? And how many cars are online today? And then the sales factor is then how many days it will take to sell those vehicles in the market right now. The lower the sales factor, the better. And this gives you an indication about how many cars that you, if you're an OEM, can actually put into that market without destroying the balance between supply and demand. And I think you can understand that if you are an OEM and you don't want to just sell 1,000 cars into Austria, in this case, you might think that it's okay to sell 100. And this is something that gives an OEM or rental companies that also have the same desire to keep a good balance of the price to say, what are we going to do? We're just going to put those cars on and allow everybody to buy them, or do we actually want to control this a little bit? And by controlling this, you can impact the residual values enormously. So very quickly, so everything that we are showing here, it becomes quite an extensive list of opportunities and solutions that we created here. So it's new car sales, it's market trends, it's geo search, which is specific for a market. You can analyze which are fast selling and which are slow selling in the market. The geo analysis is the comparison. You can benchmark. You can even see a list, and you can go and see which cars were sold, how many cars were sold, who was selling them, how long they had these cars for sale. And then at the end, geo match actually a profile of each of the car dealers that were selling those vehicles. So everything created into one solution, where if you are in the business of residual value management and remarketing, this gives you everything you need in order to make the right decisions. A comparison can look like this, where we have two things. We have historical data and we have present market data. So historical data is what happens in each of the countries the last 30 days, and market data is what is happening right now, today. And this is updated by artificial intelligence every day as we go. It's not delayed by anything. So what's the value of working in this way that I just presented? Well, we did a little test case, and we were quite surprised because a year ago when we did the same test case, the numbers were the other way around. But this test case we did here last month, 58% of the cars that we looked at and sold ended up generating more money or more revenue or higher sales price in another country than where it was already. And that is even when the transport has been paid, the documentation, everything that had to do with export. So it generated more money to the seller. And the numbers were quite amazing because the average selling price we had in this POC was 26,215 euros. The average profit we made on the cars that were sold outside was 7%, which is 1,760 euros per car. And that is, again, after transport has been paid. We looked into the market, we can see that it's not just one market. Sometimes the cars from Germany will fit best into France, or cars from Sweden will fit best into Denmark or wherever. But we get this picture where we with the AI, we'll get this information in the beginning saying the cars from Germany should go to these countries. The cars from Sweden should go to these countries, and so on and so on. And this is a very powerful and very interesting way of working because you don't waste your time waiting. You're really proactive in the way you're moving forward. This was a case of 1,252 cars sold. Just for the easy way of calculating, then I said, if this was a company that was doing 1,000 cars, let's say 1,000 cars in a month or per year, whatever, then 580 cars would then be sold with a higher profit to another country than where it actually located from the beginning. That means this is €1 million, right? 580 times the 1,760. There's a massive profitability in understanding this and giving this opportunity to work cross-border in a completely new way. Now, it's not just about understanding what you can do, right? Everything is in implementation and the way you execute. So we also started looking into AI promotion and how we can use the artificial intelligence to help us identify and activate the right buyers. I'm sure you all know that if you go online and you start looking for travel, then immediately on your phone and your feeds, they will start coming offers on travels and hotels and whatever that fits you. Sometimes we even think that the phone is listening to us, right? So we start looking into how can we use this inside the remarketing process as well. And it's all about the business case, because what we want to show and what you can show when you have made this analysis is also to the buyer, if the buyer should buy this car or not. Because sometimes a car dealer will sit and they will look at the cars online and they will say, okay, there's 20 cars online that looks nice, I want to buy a few, but they don't know how fast they sell, right? But when you offer a car to a buyer, you present things in a little different way. And this is a screenshot from one of the cars we have online, where we show two things. One, we show the price they can buy it for, right? And then also the transport included in this. And they can then see what the retail price will be and the profit. And now you see this is wrong, but this should have been the other way around. And they can see how many cars are online and how many cars were sold the last 30 days and the sales factor. This gives them an opportunity to look at this as a business case and how much profit they can make here. They can even make an offer if they want, but they can also create a PDF offer with their own logo directly to their customers and sell those cars while they're still waiting to buy. So this is a complete new way of activating the customers and how to use the artificial intelligence to help us price the cars for where they should go, but also help us to sell the cars to the buyers in the country where we want them to buy. So last but not least, AI can create geo pricing, and AI promotion can help us to increase our profitability and speed up the sale. That was all for this. I'm ready for some questions.
Thank you, Brian. Maybe, and I don't know if you can say this just right now, but one part of the question that was asked also, do you see some opportunities for EVs in Central European markets? We know that from sales point of view, they're not really high in a type of a mix, actually, EVs, but could you see some opportunities there?
So there's always opportunities moving around. So like in Denmark, a few weeks ago, Skoda decided to put a huge discount on one of their products, on the cars. And immediately things changed in Denmark for that specific car. But that doesn't mean that you cannot sell that car. It just means that Denmark is now becoming a market that is more complex for that specific car. It can also be there's too many cars on. And then you need to move them somewhere else where there's a demand for that car. And that can be any market in Europe. It changes. We saw that Denmark, again, if you take that as an example, last year, suddenly from one day to the next, plug-in hybrids stopped being interesting. They were the ones that was the fastest selling cars in Denmark. And then from one day to another, it turns from plug-in hybrids to EVs. And then you need to find another market for the plug-in hybrids. And this moves around all the time. We saw 2 months ago, Germany, the same thing happens there. France is the same. EVs are moving. And of course, we see a lot, if we should be very general, then we see a lot of EVs moving to Denmark, Norway, and Finland right now.
Yeah. Okay, it's time to invite the other experts on stage. We already had Christoph Engelskirchen. We'll also now get Maarten Bekkers. Welcome, Maarten. And Jose Serras Pereira from Frost. Welcome. Okay, I think we're all here on stage. So again, for the audience, feel free to post any question. I had one here in my phone as well. Someone that didn't want to put them, I think, in the chat. That can happen, no issue. Maybe I'll start with basically Maarten. Just maybe a short intro, because we're happy that you're here as the Remarketing Innovation Award winner of last year. And of course, your experience within Autorola and CarNext, of course, helps here as well. So a short intro from yourself, and also what's your take maybe on what has been said before?
Yeah, so indeed, at the moment, so thank you for mentioning the award. I'm also happy that we won it and that we got some international attention. We're now live in Belgium and Holland and the UK, but we did get a lot of attention now in other countries as well. So I'm actually very happy with the stage that we got to talk about what you can do with AI in automotive retail. When I look at the broader discussion about remarketing, and also indeed the experience that I have from the Autorola time and also the CarNext time, I would say that what I see very often is that we have too many focus on the seller, and that it's all seller focused. Can I auction your cars? What can we do? And that's we hardly talk about the buyers. And also in discussions in remarketing events, etc., we're all there with the sellers and the remarketing specialists, but where are the buyers? And I would actually advise to focus a lot more on the buyers. And I think that tools like AI, as we do that in retail, can also be used in wholesale. And what I mean with that is that if you want to build up higher values for your cars in remarketing, look at how can we make it more easy for the buyer to find the right car. I would advise the market to critically look at your how the cars are advertised, because actually for a buyer it's quite difficult. Many cars are sold abroad. It's a very international market. In the time from Autorola Belgium, I think 80% or something of the cars went abroad. Then the Dutch market opened up when the luxury tax was also refunded when you exported the car. So also then a lot of cars entered the international market. But when you now look at auctions, then you see cars in German language, in Spanish, in other language. It's very difficult. They are not translated. There are different ways of describing a car. I can also imagine when you handle a lot of volume, and depending on the supplier, you get another data quality of the car descriptions. So, and that's something where I see a problem. And what we see now is we're focusing on the retail market. And many retailers, they actually prefer paying more for a car that is where they know I will have it quickly at my doorstep and it's fully refurbished and it's ready for retail, because they don't have all the hassle of buying the car, transporting it, getting it ready. And even when you bid on a car, that you're not even sure what you're bidding on. And so that's something that I would advise to look at it from the buyer's perspective, and how can we make it easier.
Okay, thanks. That's a great intro, and indeed from research and websites that we've had a look at, as well as on the consulting side, we see indeed that there are a lot of tools out there which aren't really focused yet on EVs, and I think that's really an area for focus indeed. Jose, welcome. Thanks a lot to join us here, and you're in a Frost focused on mobility and have got a lot of experience on EVs as well. So maybe a short intro from your side.
Yeah, thank you. So we obviously work in terms of the mobility spectrum across the board, supporting clients, not just at OEMs and suppliers, but across the ecosystem. Anyone who's literally interested in participating in this very dynamic industry, selling solutions, technologies, and understand the dynamics. I've been in, my background is ex-OEM. I spent 10 years in research, and then in powertrain research, and then in more product focused and more long-term strategy and planning of electrification strategy at OEMs. And I've been at Frost for 4 years now, broadening my horizons. So yeah, this is an interesting topic of now that obviously the market's taking off, what the used market would look like for EVs. And I think touching upon what Martin said, more on the retail side, but yeah, consumer education and really communication on these new powertrains is going to be key in the used car market, because what we've seen in the past 5 years is really the early adopters, the technology enthusiasts, and really kind of those who enjoy the gadgets and getting into the detail of all the technology. And to move to the mass market, people really need to understand versus a standard combustion engine, what am I getting, and is this fair? And from a pricing perspective, does this make sense? And I think there's lots of things to unpack there that are quite different from the traditional combustion vehicle world.
What I think a lot of people struggle with is to forecast how fast developments will go. And it is clear that when EVs get cheaper and cheaper, when, for example, a battery gets cheaper, when charging goes faster, range goes further, and when all of this is combined, then of course we will have a challenge with current vehicles to sell them at a certain value in the future. Now, is everything really going to change so fast, or are we now entering more into an area where development would still be there, but maybe a bit more fluently, not so aggressively? What do you think?
Yeah, so I mean, you're right. In the past 10 years, the technology development and innovation in electric vehicles and battery technology and charging technology and speed and range, all these different characteristics of electric vehicles has changed, year on year. And it's very hard for consumers to keep up and to really understand the differences between different models when they have such different performance specifications. Now, obviously, Christoph touched upon some of these elements in terms of there are ways to model, the improvement in these technologies over time. But I think I'll go back to just the challenge with communication to the customer. think the industry obviously may be able to model some of these things and provide tools for the trade, but at the end of the day, you still have to make the sale, right? You have to make the sale to a consumer who is comparing it against other options, and unless you can clearly articulate why a vehicle might be more highly priced compared to something else that's not so obvious, that's going to make it quite challenging to get them to accept that. And with EVs, as we know, the challenge is that naturally you've got this big battery which is quite expensive, but obviously you've got lots of other things that are cheaper to run. Right? Fuel costs are obviously cheaper, electricity costs are cheaper than combustion. You've got lower maintenance costs. So this idea of communicating to the consumer what maybe the B2B side has been doing all the time, which is this total cost of ownership aspect, and bringing those elements into the sales discussion, I think are going to be very important, because if you just present the list price of the vehicle without explanation, I think it's going to be quite hard for consumers to understand what they're getting.
And I think Alberto has put something in the chat, which of course we need to talk about, is about the state of health. Is state of health outlook a bit figured in future value, or could we see big difference? Because everyone says like it could be that a vehicle has much higher mileage, but actually just because of the state of health, the value could be higher. So how are we on state of health, or what do we really need there? Anyone who would like to start with that?
Well, maybe I just point to on the technology side again, and then open up to the other guys. On the one hand, it's similar to combustion vehicles, right? Because a well kept diesel engine for 3 or 4 years, it's just done motorway running, may have 100,000 miles, and the vehicle is perfectly fine, and the engine's perfectly high quality. So this issue of the state of the powertrain, if you will, which is obviously what probably the biggest driver in the cost of the vehicle, is something that also exists on the powertrain side traditionally. So I think consumers understand that you can have two vehicles look the same. One may perform better than the other, even if mileage is higher than the other one. On the battery side, this is going to be the same thing. The challenge with the battery side is that obviously people need to trust that these tools are industry approved, industry standard, backed by maybe government guarantees or whatever it is, and included in the vehicle maintenance and inspection processes, which at the moment doesn't really, it certainly isn't mandated. So that's a challenge for consumer confidence, which needs to be addressed by policymakers.
Jan, do you want me to go as well? Just briefly on the topic of battery health certification. I mean, it's a signal, right? It's a signal to the buyer who cannot assess the quality of a product. And there has been a Nobel Prize on the topic of signaling. That's why OEMs have used car programs with 33 points and checkpoints that they use to market a vehicle. And for electric vehicles, there is this element of uncertainty, which might go away at some point automatically because all batteries are perfect, or it might not go away. And as long as it hasn't gone away, people will judge the quality of the battery in the worst possible way because they cannot judge it. Yeah, so it's a default game theory mechanism, and that's affecting residual values. Now the warranty that is in place, so 8-year warranties, 160,000 kilometers, is helpful. It's really helpful to make the first transaction and maybe the transaction after 3 years, 4 years, but then immediately already the next buyer is considering what is this going to mean. I mean, if I'm hitting year number 8, what is this going to mean for me in terms of remarketing these cars? And if you can, we all know if we are remarketing cars and in residual value management, as long as you can keep the curve up, as much as possible, as early as possible, you delay any problems later on. So it's a win-win to have this as a standard in the industry.
Do you see anything on state of health, Brian, from a kind of export point of view, or is there any request, or do you see any uplifts, or I'm not sure if you're integrating any state of health yet?
No, but this is an important question because we do not see a lot of questions. We do not get a lot of questions about state of health on batteries yet. There is an assumption that the battery is okay, like it's 40,000 kilometers, and then all the batteries are the same, and we know they're not, right? So I think it's definitely needed. We do not have any issues with it yet because we don't have those problems so far. But I see it's something that will come in the future. As the older the cars get, like right now, the EVs are still quite young. Like it's not like 7, 8 years old. But the older they get, the more this will become an issue.
So it would be that now the average age is still within a warranty, so it would not yet raise such concern. But my question is, and I think, Christophe, you've got a bit more view on that. I've seen that 2 of your colleagues from Norway are also in. How is that seen over there? With now, I think last year it was around 85% of vehicles were EVs in 2023. Do they see the same issue there or not?
Yeah, so I think it's battery electric vehicles is about 82% last year, latest numbers I have, and another 8% is plug-in hybrids, so they have reached 90% market share for cars that you plug into the wall. The topic definitely is that there are no other cars to buy in that market, so residual values are not such an issue because you have to go electric anyways. And the second point is there is a combination of incentives and disincentives, in particular in Norway. So you would not be wise, from an economic perspective, to move to an ICE vehicle because you are much cheaper off buying an electric vehicle. And then these topics, they are not such a concern because you have good infrastructure, and if your car has a battery which is not in the same shape as another car's battery, that infrastructure topic is playing a good role. I'm not fully aware of how the battery health certification situation is in Norway. So I don't know, maybe the colleagues can type something in the chat and give their view, and maybe we can share it. But I guess it becomes a standard for a vehicle where where things deteriorate, and you can treat a car better, as my colleagues just said. I mean, it's like a checkpoint in the history of a car. And I drive an electric vehicle, and the car tells me, please don't charge me over 80%. So, and I know why. So, but I'm not getting any credit for doing it. Not that I need it. But wouldn't it be great that the next buyer knows that I'm very meticulous, right? So I'm trying to do that. So that the next buyer sees, oh, this car has been charged really nicely, usually only to 80%. That's fantastic. That's good news, right?
Yeah, great. Now I would like to go again to the AI in auto chat there. I think, Martin, are there opportunities to use your technology basically in education, or in helping salespeople, or in helping dealers? I think in general, every research sees a shortfall in how potential customers are handled. Certainly, if it becomes a second-hand EVs, not enough explanation on affordability, or everyone is focused on buying a vehicle, not really on the advantages from service cost or consumption. Could AI help there?
I believe so. Of course, there is a difference between just advertising a car and answering questions about that advertised car, because I think that people have a lot more questions than just the advertisement. They want to know what is the total cost of ownership of such a car, but also am I able to charge it with my infrastructure? So we sometimes see questions like, I'm not sure if I'm able to charge it here, and they, what I expect, and we don't have that yet. But we will have like an upload functionality as well, so that you can actually upload pictures. And I can imagine that people actually make a picture of their electric installation, and that it will give an answer to say it's that type, and yes, you can do that in your country. These are the rules for that. So there's a lot of area for improvement in terms of advising a customer what is possible and not. And we see that, for example, we do now an experiment with one of the big retailers in Holland. They have now a new department, which is an energy department. And in this energy department, we are answering this kind of questions. And there we actually could imagine that we move the conversation to a platform like WhatsApp, so that you can say, okay, take a picture of it, or take a picture of your question, and even the pictures can be scanned, and the AI will give you feedback on combining the car, combining answers about the ownership of such a car and the costs involved with that, and also your particular situation of where you want to charge the car. So yes, indeed, I would see a lot of room for using AI in these fields.
Okay. Now, if we enter into the area on what should happen to sell those vehicles faster, maybe, but also sell EVs at higher pricing. What would you advise? What needs to happen? What's basically I'm missing? Because a lot of people just say the strangest things about EV. There's a lot of misconception. I think the articles don't always help if it seems that everyone just wants to find things that go wrong or that aren't good. Maybe first, Jose, what's your view? What should maybe lease companies or OEMs start doing?
Yeah, I mean, we've seen this already. The myth busting, marketing approaches about some of these things, because it can be very frustrating for everybody in the industry when, the headlines you see in the mainstream press, one way or the other. Some are exclusively, this is amazing, it's super green, and everybody should do it without question, which isn't helpful either, because it misses some key points about the value chain of electric vehicles and batteries, which we are now discussing and addressing, dependence on China, the actual carbon footprint of battery manufacturing, etc. But at the same time, on the other end of the scale, you've got, headlines talking about battery fires and all sorts of other things, reliability issues, etc., which on average actually are better in principle than combustion engines. Things like total cost of ownership, the ownership experience, noise pollution, local air pollution, etc. It's not just about the climate; it's about the impact on local pollution, and in families, for example, with children, it makes a big difference, right? You're getting kids in and out of a vehicle without fumes, etc. So there's it's always the challenge with these things that are in a transition to get people back on message. So I think we're going to have to continue to invest. I don't think these are one-off activities, unfortunately. As we've seen with the slowdown, we're going to have to continue to kind of put this information out, and retailers are going to have to do the same and be patient with consumers who get confused about all these different topics.
True. Anyone else? Any great ideas? Ryan, what's your view?
Well, I'm a little two-sided on this with electric vehicles and what is happening, because, like you see, imagine you are a private person and you bought the car, not rented or leased one. You bought this car 2 years ago, and then suddenly you have this massive depreciation impact on your private economy. So I think as an industry, the way the EVs were introduced into the market, the whole all the medias around it, all the everything that was done to make this a good thing, and then suddenly we see that it is not. Right? So I still think it's good. There's good things for the environment. There's a lot of good things there, but I honestly think that the introduction and the launch of these products were not done in the right way. I hope that we going forward will have more transparency and more responsibility from the manufacturers and everybody in the value chain of making this shift that we all talk about. We want to go green, but it has to be done with responsibility.
Do we see the future pricing being more stable? I don't know if anyone wants to have a kind of go at that. Of course, we've seen last year, we all know, and you were also saying, Brian, on the alignment that you saw in Denmark and other countries, following a bit Tesla, which it is like that. Of course, they can still afford it. Why? Yeah, it seems that they've got a healthy structure. Of course, other OEMs are also paying them for their CO2 credits, which is not helping maybe others. But would we see more stability in this? Christoph, I don't know if you have a idea of that.
Well, I mean, I think first of all, we are now seeing cars coming to market that are smaller, and more, more competitive from a mass market perspective. I don't think that the price, the drops in prices are going to continue forever, because there's a limit of how much you can bite into your margin. What I could expect is that, on the other hand, that ICE vehicles are getting more and more expensive, just to sweeten the deal a little bit, for those that are opting for electric vehicles. And just on the point of are people buying the technology, or are they not happy with the technology? I think what we're seeing at the moment is quite normal in any product adoption curve. So it's sometimes called trough of disillusionment. So bad news are happening all around us, and people are just jumping on the bad news. But again, I was making this point earlier, the decision has been made, right? So the electric vehicle will come, but you cannot fool consumers into it. So you have to make the deal attractive, and so either the prices for internal combustion engine vehicles are going to rise and rise and rise, because everybody wants them, but they're going to be phased out of the market, and that makes it more attractive to buy electric vehicles. Or, and I think that's important, we have to realize, governments have to realize, they have to incentivize, they have to find ways to incentivize, disincentivize, if they want to speed up the transition, because the transition was not asked for by OEMs, it wasn't asked for by consumers, but societies, elected politicians, and those politicians decided on behalf of society that we want to move into green technology, into battery electric vehicles. So it's a question of finding the balance between incentives and economic attractiveness. I don't think people will just buy it because they suddenly realize they want to be all green. It's a very economically driven decision for the individual.
Yeah. What I would like to do for the last, let's say, 5 minutes, 10, is launch a poll. We're going to launch it now, and it's about something else. Actually, is what would you, as audience, like to hear more of in 2021? If you can use just a single word, and then we'll ask the experts maybe to take out some words or a word where they would like to give a first comment on. I don't know if you see anything. Some people are typing, so things will come up. Might I do the same as well? I'm gonna vote as well. So battery recycled data used on sales. So there are some more coming, and of course, this is also helpful for us to see what's on your mind as well, so that we can take those in the future. Any one of the experts that sees a word where they would like to give a first comment on, feel
I can't stop smiling with hydrogen popping up.
Hydrogen. Well, I thought, Jose, that could be something for you, no?
We must have commercial vehicle colleagues on the call. Hydrogen is being pushed by some of the OEMs, specifically for kind of heavier intercity kind of delivery vehicles. It will play a role potentially in the future. I think there's a lot of hype now again. This year, end of last year, I think Christoph was mentioning some of the challenges in policymakers being consistent, and I think this is we're suffering a bit of a whiplash in the last 6 months in terms of the policy communications consistency. And hydrogen is now kind of on the bandwagon, trying to ride that kind of wave of EV bashing. But I think it will grow a little bit in niche areas, but I don't think it will make any competition with electrification.
Okay, thanks. Anyone else who sees a word where they would like to jump into? Martin, Brian, Christoph?
I guess new player RV strategy, that's an interesting, term to show up here. I think everybody needs one. Maybe this point hints at or suggests that some of the new players don't have an RV strategy yet, but I know that I know that many are working on one, because especially when it comes to battery electric vehicles, it's all about leasing. Yeah, those cars, they go into the the books of a bank in the end, and that bank puts a residual value on it, a risk factor on it. So it's an important building block for selling battery electric vehicles, new and used, by the way, because if you can take that asset risk away from the consumer, and I know leasing companies are trying to think this through, it's valuable to have an RV strategy in place. Yeah.
I like to comment on that, because I think RV and used cars is the same. Right? Used car strategy is the one that drives your RV. One of the things we see with these new players, if we should say a little about this, is that a lot of them tend to go to fleet and think that's where the entry is to the market. But the fleet is always, or rental especially, is a very short cycle, it's very short term. Meaning that when these cars come back again, if you do not have a good retail market on private consumer, then you are really creating a problem. It's a very sweet deal when you make it, but at the end of the day, if you do not have a good used car strategy and a demand for those vehicles, then the RV will be there to tell you that you made a mistake. And we have seen the likes of the rental company, I'm not going to mention name, rental companies that has just closed or stopped a huge deal of EVs that were supposed to be delivered, exactly because of this. The used car strategy was not solid enough to keep the RVs in place, and then the TCO for that those rental companies increase, and then they stop. So it's very important for the new players to have a good balance in the way they go into the new car sales with a used car plan. Otherwise, this is just going to destroy even more for everybody. It's not, as soon as one gets hit, it starts hitting everybody in the same market.
And just to come in on that, I think it's a real shame that happens, because that's a purely operational aspect. But what happens is that it gets picked up in the news, in the headlines, and it feeds into consumer confidence, or lack of consumer confidence, because I've seen it being reported that this company and others are dumping EVs as if it was some sort of, we made a mistake. These are not good vehicles, and now we go back to combustion engines, and that's a real shame, because I think there's lots of good vehicles out there. But some of these, more financial aspects and business model aspects get picked up on and are used by some of the actors who are not so keen in pushing this market.
So I think, Martin, you were a bit quiet. Maybe you just wanted to have the final word here in the panel, no?
That was about how can I add some more value to the discussion, but I think
Yeah.
that in the end,
Any of those elements here you see valid? Of course, AI is in your area, of course.
Yeah. I would say that if you look at indeed battery health and education about batteries, and actually what is a reason to lease is also to put the risk of the residual value in the hands of a leasing company. And I think that when the cars are remarketed, that we forget about that, because in the end, at that moment, the buyer or the retailer is also needing to sell the car to somebody who takes that risk on what will the car be worth in the future. And perhaps it's something that the leasing sector can think about. Shouldn't we reinvent remarketing when it comes down to electric cars, and take this risk of residual value and the battery health away from the buyer of the car. And I think that there are possibilities, and we should perhaps reinvent remarketing in that way and do it in a different way when it comes down to battery electric vehicles.
Yeah, and I think it's also it's on the slide here. The second cycles, actually, a second cycle and a third cycle. We've been talking about this for a while, some years. Unfortunately, there's not a lot of availability sometimes, but I think there's certainly something in there. We are coming to the end. We just always would like to keep it within 1 hour and a half, because otherwise I think it's going to be too long. I would like to thank everyone here for their contribution. Thanks a lot, Martin, Christophe, Jose, and Brian. And hope to see you again on one of our other events later. Thank you. I would like to thank our sponsors again. And of course, the first thing you'll hear from us as an audience, for the audience, is an ebook that will come out within a few weeks. Thanks a lot to be here, and we'll see you next time.